All right, so get ready because we are diving deep into some fascinating analysis about the October CPI numbers.
Yeah.
You sent over this document. It's great because it doesn't just give us the raw data, right?
Right.
It also has like an expert take on it, which is perfect for our, deep dive here.
Absolutely.
So is this recent, dip in inflation just a temporary thing?
Yeah.
Or is a second wave going to come crashing down on us? And what does that mean for, you and me?
That's the big question, right?
Yeah.
And that's what this analysis is really trying to unpack.
Okay, let's start with the October CPI numbers. Headline, CPI rose 0.2% month over month, 2.6% year over year.
Yeah. Pretty much in line with expectations.
Yeah, but it still feels like inflation is just sort of hanging around.
Right. Exactly. And I think the real story is in that core CPI number, stripping out those volatile food and energy prices.
Okay.
It rose 0.3% month over month and 3.3% year over year.
Okay.
Which, isn't insignificant. But I think what's really striking is that this marks the 53rd consecutive month of core CPI increases.
Wow.
Yeah.
53 straight months?
53.
That's a lot of increases. What does a streak like that really tell us about the bigger picture here?
Well, I think it suggests that inflation is becoming much more deeply embedded in the fabric of the economy.
Okay.
It's not just, a few things getting more expensive.
Yeah.
It's like a stubborn stain.
Oh, I like that.
Yeah. It's not coming out easy.
Okay, so inflation is like that guest who just won't leave your party.
Uh-huh. Yeah.
But here's what I found interesting. This data dropped right after the presidential election.
Yeah.
The document makes a point of saying that.
Yeah, it definitely does.
And it kind of hints that maybe there's some political shenanigans going on.
It calls it a potential political illusion of controlled inflation.
Right.
Which is a fancy way of saying that maybe some numbers are being, massaged, shall we say,
Massaged.
to paint a prettier picture after the election,
Yeah.
It's a cynical take.
Yeah.
But you have to admit the timing is a little suspicious.
Yeah, it raises an eyebrow for sure.
It does.
And then the document goes on to highlight, a few more of these concerning signs. And one of them is owner's equivalent rent.
Right. OER.
It's up 5.2% year over year.
Yeah, and OER is really interesting because it goes beyond just rent prices.
Oh, okay.
Right. It reflects the overall cost of owning a home,
Right.
which is this massive part of people's budget.
Yeah.
And it tends to be very sticky.
Sticky.
Meaning once those housing costs go up,
Okay.
they tend to stay up.
So it's not just about like what your rent is doing. It's kind of like a canary in the coal mine for the whole economy.
Yeah, exactly.
Yeah.
And that's why the author is flagging it as a potential problem.
Okay, so we've got this, potentially massaged CPI data.
Right.
We've got these sticky housing costs. And then they go on to talk about this thing called super core inflation.
Yeah, super cool.
Your core CPI on steroids, right?
Yeah, it excludes food, energy, and housing.
Okay.
All the big stuff.
Yeah. So why is the author so fixated on this super core number? What makes it so special?
Well, I think it gets at this idea that inflation is much more widespread and deeply rooted than the official CPI might suggest.
Okay.
So it's sitting at 4.6% year over year, which is, significantly higher than that headline CPI number.
Right.
And it's really a measure of inflation in sectors that are typically very resistant to price swings.
Okay.
So, you're looking at things like healthcare, education,
Okay.
transport.
Yes, the stuff that you really can't avoid.
Exactly, the essential stuff.
Yeah.
And if those prices are going up consistently, it suggests that there's some serious underlying pressure building up in the economy.
Okay. And the document's big takeaway from all of this is...
Hold on to your hats, because they're predicting a second wave of inflation hitting by early 2025.
Early 2025. Wow, that's not that far off. What's their reasoning behind that?
Well, they cite a few key factors.
Okay.
First, they expect to see a rise in tariffs and tighter immigration policies.
Okay.
Now, those policies might sound good in theory,
Right.
but they can actually lead to higher prices because they restrict the supply of both goods and labor.
So less stuff to buy, fewer people to do the work, and boom, prices go up.
Exactly. Economics 101.
Okay. What else are they pointing to?
Well, they're also looking at certain economic indicators that seem to be bottoming out,
Okay.
which suggests that there's a turn towards higher inflation coming, regardless of who's in charge.
So it's not just about politics.
No, there are deeper economic forces at play here.
Okay.
And then there's this is where the author really goes out on a limb.
Okay.
They claim that hitting that 2% inflation target by late 2025 is mathematically impossible.
Oh, wow.
Yeah, they even walk through the math in the document, and it's actually quite compelling.
So they're saying, like, based on the current trajectory.
Based on everything we've talked about,
Yeah.
there's just no way to get to that 2% target.
Okay, so let's say they're right. What does this second wave of inflation actually mean for, people like us, for our everyday lives?
Well, if inflation spikes again, it could mean a pretty significant increase in the cost of living.
Yeah.
Everything from groceries to gas to housing could get more expensive.
Right.
And that could put a real strain on household budgets, especially for folks who are already struggling to make ends meet.
Yeah, definitely not a scenario any of us want to see.
No.
Now, this document is all about CPI, but it also gets into some alternative ways of measuring inflation.
Right. It argues that the CPI is being manipulated and presents gold as a better indicator of true inflation.
Okay.
And they introduced this concept of the gold to U.S. Treasury ratio.
I'll admit that one's a little over my head. Can you break that down for me?
Sure. So imagine you're holding a scale.
Okay.
On one side, you have gold, which is a tangible finite asset.
Right.
On the other side, you have U.S. Treasury bonds, which are essentially promises of future payment from the government.
Okay.
Now, during times of high inflation, people tend to flock to hard assets like gold,
Makes sense.
driving up its price.
Okay.
Meanwhile, bonds lose value as inflation rises, so they become less attractive.
So if that ratio is going up, it means inflation is heating up.
Exactly. And the document shows us these charts where this ratio has been exceeding its 7-year moving average since mid-2019.
Wow.
Yeah, so it's like a flashing red light on the dashboard saying, hey, inflation might be worse than we're being told.
Okay, I'm starting to see why this author is so worried, but here's what I found really interesting. They don't just look at the U.S.
Right.
They compare gold to similar assets in Europe, Japan, and China, too.
Yeah, and they find that this upward trend in the gold-to-bond ratio is happening globally.
Wow.
So it's not just a U.S. phenomenon.
So we've got this alternative indicator suggesting that inflation is more widespread and persistent than we might think.
Right?
And then the document takes us on a little trip back in time to the 1970s.
Yeah, the 1970s.
Why the 1970s?
Well, the author sees some pretty striking parallels between that era and the economic and geopolitical turmoil we're seeing today.
Okay.
They point to things like the oil crisis,
Yeah.
the breakdown of the Bretton Woods system.
Right.
And they even include a chart comparing inflation trajectories from the 1970s and the 2020s.
Okay.
And it's a little spooky how closely they line up.
So are we really headed for another 1970s style inflationary crisis?
Well, that's the million-dollar question, right?
Yeah.
I mean, history doesn't always repeat itself perfectly.
Right.
But it often rhymes, and I think these parallels are definitely something to pay attention to.
Okay, so it's not a crystal ball, but it's definitely a warning sign.
I would say so.
Yeah. Something else that really caught my attention was the document's pretty harsh criticism of the Fed.
Yeah, they really go after them.
They don't mince words.
No, they call the Fed's actions partisan and impotent.
Wow.
Yeah, it's a pretty scathing assessment.
So what's the basis for that critique? What are they accusing the Fed of doing?
Well, they argue that the Fed is too focused on the bond market
Okay.
and not paying enough attention to what's happening in the real economy. Where people actually live and work.
Right.
They're cutting rates, even though there are clear signs of persistent inflation.
Yeah.
Which they see as a huge mistake.
So they're basically saying that the Fed is playing politics with the economy.
That's the gist of it, yeah.
Instead of, doing what's best for the people.
Right. They also accuse the Fed of blurring their inflation targets
Okay.
by using so many different measures that it's hard to hold them accountable.
So it's like a magic trick, right?
Yeah, bit of smoke and mirrors.
They're making inflation disappear.
Trying to, anyway.
Okay, so we've got this potential manipulated CPI. We've got a Fed that's maybe not doing its job. And we've got those eerie parallels to the 1970s.
Right.
So where does that leave us? What's the big scary prediction here?
Well, buckle up, because the author believes that we're headed for a stagflationary nightmare.
Stagflation. Okay, that sounds ominous.
It's the combination of high inflation and slow economic growth.
Yeah.
Which is just a brutal 1-2 punch for everyday people.
And why is that such a bad scenario to be in?
Well, imagine your money is buying less and less every day,
Yeah.
but the economy is sputtering, so there are fewer job opportunities,
Yeah.
wages are stagnant.
Yeah.
It's just a recipe for economic hardship,
Okay.
especially for folks who are already struggling.
And they say we're how close to this?
6 to 9 months.
6 to 9 months away from this stagflationary shift.
Yeah, that's their prediction.
Okay, deep breaths, everyone. So let's say this prediction comes true.
Okay.
What are we supposed to do? How do we protect ourselves?
Well, thankfully, the document doesn't just leave us hanging.
Okay.
It offers some very specific investment advice.
Okay, let's hear it. What's the survival guide for this potential economic storm?
Well, first they say to steer clear of long-dated government bonds,
Okay. No bonds, got it.
especially those maturing in over 6 months.
Okay, so short-term bonds are okay.
Yeah, potentially.
Yeah.
But I would tread carefully even there.
Okay, so no bonds. What else?
They suggest focusing on equities of companies that have pricing power,
Pricing power.
meaning those that can raise prices without losing customers.
Got it.
And companies with strong financials, think of, businesses that are built to weather a storm.
So like the companies that are going to do well even when things are tough.
Exactly.
Okay, makes sense.
And then finally, they advise holding a significant portion of your portfolio, somewhere between 20 and 40%,
Okay.
depending on your risk tolerance,
Yeah.
in hard assets like physical gold, silver commodities.
So basically things that are going to hold their value even when the economy is going haywire.
Right. The idea is that these assets tend to perform well during periods of high inflation.
Okay, so avoid bonds, focus on strong companies, and load up on gold and silver.
That's the basic strategy.
Yeah.
Yeah. But I would always recommend talking to a financial advisor
Sure.
before making any big investment decisions.
Yeah, this is not financial advice.
Yeah, no.
This is just a deep dive.
Just a conversation.
Yeah, well, we've covered a lot of ground in this first part of our deep dive.
We have.
We've dissected this, experts' rather alarming interpretation of the CPI numbers.
Yeah.
We've explored, those alternative ways to measure inflation.
Right.
We even got into their criticisms of the Fed.
Yeah, they definitely had some thoughts about the Fed.
Yeah. But, the document ends on this kind of ominous note,
Yeah.
calling the current situation the calm before the storm.
So what can we do to prepare for this storm?
Yeah,
What steps can we take now?
to kind of batten down the hatches.
Exactly.
So stay tuned because things are about to get even more interesting.
Absolutely.
Okay, so we've just been handed this pretty grim prediction about stagflation, high inflation and slow economic growth all at the same time.
Right. It can feel a bit overwhelming.
Yeah, it's kind of scary.
It is, but I think knowledge is power in situations like this.
Right. The more we understand what's happening,
Yeah.
the better equipped we are to deal with it.
Exactly.
So let's dive into some practical stuff. What can people actually do to prepare for this potential economic storm?
Okay, well, the first line of defense is always shoring up your financial foundation.
Okay.
Taking a hard look at your budget, cutting out any unnecessary expenses.
Okay, so tighten the belt a little bit.
Yeah, basically think of it like you're trimming the fat.
Hmm.
So you're lean and mean,
Yeah.
ready to weather any financial headwinds.
Okay, I like that. But for some people, there's just not a lot left to trim.
Right.
What are some other options for folks who are already feeling kind of stretched financially?
Well, that's where diversifying your income streams comes in.
Okay.
Relying on a single source of income can be risky.
Especially if the economy takes a downturn.
Exactly. It's like putting all your eggs in one basket.
Right.
So if that basket falls, you're in trouble.
Yeah, you're in trouble.
Yeah.
So how do you diversify your income? What does that actually look like?
Well, there are lots of options these days.
Okay.
It could be a side hustle, freelancing, even exploring the world of investing.
Okay.
Having multiple streams of income acts as a safety net.
I like that, building a financial safety net.
Yeah, exactly.
Now, speaking of safety nets, the document also talks about diversifying your investment portfolio,
Right.
which is interesting because, earlier they were pretty gung-ho about gold and silver.
Yeah. And those hard assets definitely have a role to play,
Okay.
but it's not about going all in on, gold bars.
Right.
A truly diversified portfolio is like a well-balanced meal.
Okay.
A mix of stocks, bonds, maybe some real estate, and other assets that, spread your risk.
Okay, so don't put all your eggs in one basket and don't put all your baskets in one market.
Exactly. And it's important to, do your research,
Yeah.
maybe talk to a financial advisor and come up with a plan that makes sense for you.
Right, because everyone's situation is different.
Exactly. There's no one-size-fits-all solution.
Now let's talk about debt. How should people be thinking about debt in this potential stagflation scenario? It feels like kind of a double-edged sword.
Yeah. You're right. It's a balancing act.
Mm-hmm.
On the one hand, high inflation can actually erode the value of debt over time, making it easier to pay off in the long run.
Okay.
But if we're also facing slow economic growth, it can become harder to keep up with those debt payments if your income stagnates or you lose your job.
So it's a bit of a gamble then.
It depends on the type of debt you have.
Okay.
High interest debt, like credit card debt, is almost always best to pay down as quickly as possible.
Okay, so like Get rid of those credit cards.
Yeah, it's like a financial anchor dragging you down.
Yeah, got it. No more credit cards.
But if you have low interest debt, like a mortgage,
Okay.
it might make sense to hold on to it and let inflation slowly chip away at its real value.
Okay.
But of course, talking to a financial advisor can help you weigh these options and figure out what makes sense for your specific situation.
Right. That makes sense. Now, this document paints a pretty gloomy picture.
Does.
But it's not all doom and gloom, right? There have to be opportunities hidden within these challenges.
Absolutely. I think times of economic upheaval often create space for, innovation and entrepreneurial spirit to flourish.
Okay, so in a way, inflation can be a good thing.
Well, it can be a catalyst for, new ideas and new approaches.
Okay, so how does that work?
Well, think about it. When prices are rising, it creates opportunities for new businesses to emerge,
Okay.
to offer, goods or services at more competitive prices.
Okay, so it kind of shakes things up a bit.
Exactly. It forces people to get creative, and those who are adaptable
Yeah.
and can quickly adjust to changing circumstances often thrive in these environments.
It's like that saying, necessity is the mother of invention.
Exactly.
This whole conversation has me thinking about resilience.
Yeah.
How can people cultivate resilience in the face of so much economic uncertainty?
That's the key, isn't it?
Yeah.
Resilience is about developing a mindset that helps you adapt to change, overcome obstacles, bounce back from setbacks. It's about having a positive outlook,
Yeah.
a strong support system, and a willingness to learn and grow no matter what life throws at you.
So it's not just about prepping your finances.
No.
It's about prepping your mind and spirit, too.
Exactly.
Take care of your overall well-being. Physical, mental, emotional.
Yeah.
And you'll be much better equipped to handle whatever challenges come your way.
Okay, so we've been laser focused on the U.S. economy,
Yeah.
but we all know that the global economy is like this giant spider web.
Right. Everything's connected.
Yeah. So what are some of the global factors that could impact this stagflation prediction?
Well, we've got a whole host of potential global wildcards out there.
Okay.
Geopolitical instability, for example,
Okay.
can throw a real wrench in the works.
How so?
Well, ongoing conflicts and tensions can disrupt trade,
Okay.
jack up commodity prices, and really fuel those inflationary fires.
We're already seeing that play out with the energy crisis in Europe.
Exactly. And then there are those pesky supply chain disruptions
Right.
that have been plaguing the global economy for years.
Yeah, it feels like we can't catch a break with those.
I know, right? And these bottlenecks lead to shortages, delays, and ultimately higher prices.
Right.
Further adding to that inflationary pressure cooker. And of course, we can't forget about China.
Right. China's the big wild card.
Yeah. It seems like whatever happens in China has this ripple effect on the entire planet.
Oh, absolutely. And their economic slowdown is a major concern.
Okay.
Because it could trigger a decrease in global demand for goods and services,
Yeah.
which could in turn impact economic growth in other countries, including the U.S.
So it's this complex web of interconnected factors, both domestic and global,
Yeah.
that will ultimately determine how this stagflation scenario plays out.
Exactly. And that's why it's so crucial to, stay informed,
Yeah.
pay attention to what's happening in the world, and be prepared to adapt as the situation evolves.
Right. Okay, now, this document is clearly written from a very specific perspective.
Yeah, it has a definite point of view.
It's highly critical of certain policies and institutions.
Right.
So how should people interpret this perspective?
Well, it's important to remember that every analysis, every opinion comes with its own set of, biases and assumptions. This document is no different.
Yeah.
It presents a particular point of view.
Yeah.
And it's up to each individual to decide whether they agree with it or not.
Right.
The key is to be a critical thinker.
Yeah.
Don't just blindly accept everything you read.
Do your own research.
Exactly.
Weigh the evidence and
Right.
come to your own conclusions.
Exactly. Be an active participant in the conversation, not just a passive observer.
I like that. Okay, so we've talked about what individuals can do to prepare, but what about the role of government in all of this?
Right.
What can policymakers do to address these potential challenges?
Well, that's a great question. And it's one that's being fiercely debated right now.
Okay.
Governments have a number of tools at their disposal to try to, control inflation and stimulate economic growth.
Okay.
We're talking about things like fiscal policy,
Okay.
monetary policy, regulatory policy.
Okay, I'll admit I get a little lost in the jargon sometimes. Can you break those down for us?
First of all, fiscal policy is all about government spending and taxation. So governments can try to stimulate demand in the economy by increasing spending or cutting taxes.
Right.
But if these measures aren't carefully managed, they can backfire and actually contribute to inflation.
Okay, so it's a delicate balance.
It is. It's like walking a tightrope.
Okay, what about monetary policy?
So monetary policy is controlled by central banks like the Federal Reserve,
Okay.
and they can manipulate interest rates
Right.
to try to control inflation and influence economic activity.
Okay.
But as we've discussed, the effectiveness of monetary policy is being questioned.
Yeah, this document wasn't too happy with the Fed.
That's putting it mildly.
Okay. And then what was the last one? Regulatory policy.
Right. So regulatory policy refers to the rules and regulations that govern businesses and industries.
Okay.
And governments can use this to, try to foster competition,
Yeah.
encourage innovation, promote efficiency,
Okay.
all of which can help, boost economic growth and keep prices in check.
So it's this complex interplay of different policy tools
It is.
that governments can use to try to manage the economy.
Right. And unfortunately, there's no simple solution,
Yeah.
no magic formula. The best approach will always depend on the specific circumstances of each country
Yeah.
and the ever-changing global economic landscape.
Okay, so let's go back to that central question that kicked off this whole deep dive.
Okay.
Is this recent slowdown in inflation just a pause
Right.
before we get hit by a second wave?
That is the million-dollar question.
Yeah.
And it's one that has economists and policymakers all over the world scratching their heads.
Really?
Yeah, there are valid arguments on both sides.
Okay.
Some believe that inflation has peaked
Okay.
and will continue to kind of mellow out in the coming months.
Okay.
Others, like the author of this document, are convinced that we're on a collision course with an even bigger surge of inflation.
So no one really knows for sure.
The economic crystal ball is a bit foggy right now.
Yeah.
There are so many variables at play that it's impossible to say for sure which way things will go.
So it's not really about predicting the future with certainty. It's
Right.
about being prepared for a range of possibilities.
Exactly, and
Uh,
being flexible enough to adapt as needed.
Right. So what's the one key message you want our listeners to walk away with?
Well, I think the most important takeaway is this. Even in the face of economic uncertainty and, potential hardship, we are not powerless.
I like that it's empowering.
We have the ability to make choices, to take action, to shape our own destinies.
It's a reminder that we're not just passive victims of circumstance.
All right.
We can be proactive. We can take control of our own lives.
Exactly. Knowledge is power.
Yeah.
And the more you understand about the forces that are shaping the world around you,
Yeah.
the better equipped you'll be to make informed decisions and navigate whatever challenges come your way.
So stay informed, stay engaged,
Absolutely.
and don't be afraid to ask the tough questions.
That's right. And remember, even in the midst of uncertainty, there are always opportunities
Yeah.
for those who are willing to seek them out.
That idea of a system reset kind of stuck with me. It's a pretty radical concept.
Yeah.
But the more I think about it, the more it feels like something's got to give, right?
Right. I mean, we're not just talking about like tweaking things around the edges.
Right.
This document is calling for a fundamental rethinking of, the assumptions that drive our economy.
Yeah, it's kind of like shaking the foundation of the house you're living in. You
Yeah.
don't even know if it'll stand back up.
Exactly. And I think that's why these kinds of conversations are so important.
Right.
We can't just pretend everything's fine
Right.
when there are these cracks appearing in the foundation.
So where do we even begin with something as massive as a system reset?
Right.
What are like the key pressure points that we need to address?
Well, the document points to the growing gap between the rich and the poor
Right.
as a major source of instability.
Okay.
This level of inequality is unsustainable.
Yeah.
It creates tension throughout the whole system.
Yeah. It's like that whole eat the rich sentiment that's been going around.
Yeah, exactly.
How do we translate that anger into actual solutions?
Right. Well, there's no shortage of ideas out there.
Okay.
Some folks advocate for progressive taxation,
Okay.
where the wealthy pay a higher percentage of their income in taxes.
Okay.
Others propose a universal basic income.
Okay. A guaranteed minimum income for everyone?
Exactly, regardless of their employment status.
Okay.
There are also movements pushing for worker-owned businesses,
Okay.
giving employees a direct stake in the companies they work for.
So it's about kind of redistributing wealth and power in a way.
Yeah, in a more equitable way.
Okay.
And I think finding the right mix of solutions is going to require, experimentation
Yeah.
and a willingness to challenge conventional wisdom.
Right. So be open to new ideas, even if they seem radical.
Exactly. We
Right.
can't keep doing the same things over and over again and expect different results.
Right.
We need to think creatively.
Okay, now this document also really goes after the current financial system.
Yeah, they're not holding back.
It talks about the dangers of runaway debt. Right. The manipulation of currencies,
Yeah.
the outsized power of central banks.
Yeah, they see the whole system as rigged.
So, if we're talking about a system reset,
Hmm.
what are some of the alternatives to this system?
Okay, well, there are a lot of different ideas out there.
Okay.
Some folks advocate for a return to the gold standard,
Okay.
pegging currencies to a fixed amount of gold.
Okay.
Others are really excited about decentralized cryptocurrencies like Bitcoin,
Yeah.
which operate outside of traditional banking systems.
Okay.
And then you have movements pushing for community-based currencies
Okay.
and alternative banking models that prioritize local economies and social good.
So it's kind of like a wild west of financial experimentation right now.
Yeah, it is. A lot of people are looking for a better way.
So what are they trying to achieve with these alternative systems?
Well, I think it's about creating a system that's more resilient,
Okay.
less prone to manipulation and collapse.
Right.
And it's about empowering individuals and communities
Oh.
to have more control over their own financial destinies.
Okay, so we've talked about inequality.
Yeah.
We talked about the financial system. Are there any other big picture ideas that could contribute to this system reset?
Well, the document also touches on the need for a more sustainable and equitable approach to globalization.
Okay.
They argue that the current model of globalization,
Yeah.
which prioritizes profits over people and the planet,
Yeah.
is leading to, environmental degradation,
Yeah.
social unrest, economic instability.
So it's not about like getting rid of globalization altogether. It's
That-
about rethinking how it works.
Exactly. We need a more balanced and sustainable approach
Yeah.
that takes into account the needs of all stakeholders.
Yeah.
Workers, consumers, communities, the environment.
Okay. So what would that look like in practice?
Well, there's a growing movement towards fair trade practices,
Okay.
ethical sourcing, conscious consumerism.
Okay.
These are all positive signs that people are starting to demand a more responsible and equitable global economy.
Okay. And what about technology? We're living through this incredible technological revolution,
Right.
AI, automation, all these crazy advancements.
Yeah, moving so fast.
So how might technology contribute to or hinder this system reset?
That's a great question, and it's one that's generating a lot of debate.
Okay.
Some people believe that technology can be harnessed to create a more equitable and sustainable world,
All right.
while others worry about, job displacement, social control, widening inequality.
So technology is a tool.
Right.
It can be used for good or for evil.
It depends on who's wielding it.
Yeah, and what their intentions are.
Exactly. It's up to us as a society to decide how we want to use technology, to set the rules and regulations,
Right.
and to ensure that it serves the common good.
Now, this document is pretty intense.
Yeah.
It's not exactly a feel-good read.
No, it's definitely a wake-up call.
It paints a pretty bleak picture of the future,
It does.
with warnings about potential conflicts,
Yeah.
economic collapse, social unrest. It's not sugarcoating anything.
But there's got to be some hope here, right?
So absolutely.
What's the message of hope?
I think the message of hope is that we have the power to change things.
Okay.
We're not just passive victims of circumstance.
Right.
We can make choices, both individually and collectively, that can shape a better future.
Okay.
And it starts with awareness,
Yeah.
with education, with having these difficult conversations.
So what can people actually do?
Well, it's about engaging in the political process,
Okay.
holding our leaders accountable,
Yeah.
and demanding a system that works for everyone, not just the privileged few.
So it's not about giving up.
No.
It's about getting involved.
Exactly.
It's about fighting for a better world.
It's about recognizing that we're all in this together
Okay.
and that we have a shared responsibility to create a more just equitable and sustainable future.
That's a powerful message.
And it's not just about us. It's
Wow.
about, future generations as well.
Well, we've covered a lot of ground in this deep dive.
We've explored some complex and challenging ideas,
We have.
and we've hopefully given you, the listeners, some food for thought.
A lot to chew on.
We've talked about stagflation,
Right.
the flaws in the current system, the need for this fundamental reset.
Yeah, we really went deep.
We've delved into the potential solutions,
Yeah.
the alternative models.
Hopefully spark some new ideas.
Yeah, and I think the goal of this deep dive, as always, is to empower you, the listener,
Right.
to make informed decisions.
To think critically.
Yeah, and to navigate the complexities of the world with a critical and discerning eye.
We've given you a framework for understanding these issues.
Right.
But ultimately, the journey of exploration and discovery continues with you.
So stay curious, stay engaged,
Absolutely.
and keep asking those tough questions.
Never stop questioning.
Thanks for joining us on this deep dive.
It's been a pleasure.
Until next time, keep learning, keep growing, and keep pushing for a better world.